Hello and welcome to another update video about MATIC. So MATIC could have 5 waves complete on this way to the upside here. This could be either in this C wave that we talked about with another sell-off coming to the downside, A, B, C. Yeah, we discussed that. The price reacted here to the 119 level, the 78.6 fib retracement, one of the resistance levels that we talked about in the previous video, and we currently see a sell-off and is joining the other coins in the sell-off, and it could very well be that we have a wave 2 top in place here and that we're now coming down in the third wave. This is currently still quite a likely scenario. However, we have to have an open mind, and possibly this is going to become a breakout. Discussed it as well. Unfortunately, we didn't go high enough to really get clarity about that. Yeah, it would have been nice to break above 130, then at least we would have had clarity. But unfortunately, a wave 2 that retraces to the 78.6 retracement is nothing unusual. So yeah, we reacted perfectly actually to one of the ideal levels. Only above the 78.6 retrace, it's getting a stronger retracement than ideal. So it reacted now. Now we just need to see. Okay, so from my point of view, if this is now the sell-off, then we should obviously make a new low. But for anybody who plans to go long, this might become an opportunity now, because we can now draw the fib levels from the low here, from the beginning of that 5-wave move to the top. Because in a bullish interpretation, this could be a wave 1, 5 waves possibly complete. So the yellow count is the bullish count. Then a wave 2 is coming down possibly now. And then there should be a 3, 4, 5, which means if we get into a certain price region, which is ideal for this wave 2, we could be looking at a possible entry point. Yeah. That should be, so first of all, that sell-off should take place ideally in an ABC structure. Of course, you know, if we now break above the 119 level, we have to assume we are continuing the move up. This would become a very strange pattern then, to be honest, a very weird count. But for now, I'm assuming the wave 2 has started. Unless, let me think, yeah, it should really. So let's see if that's going to happen. But it should take place in an ABC correction like that. Yeah, we have no indication that the wave A has bottomed. Okay, so let me think. So yeah, so if we draw the fibs, we get here to a possible entry point between the 97.4 cent level, that's the 50% retracement, and the 84.4 cent level. So 84.4 is now the main bullish support. Getting below that level would not invalidate this bullish interpretation, the 1-2 setup, but it would make it very unlikely. Yeah? So again, from experience, 85 to 90% of count or charts fail when they drop below the 78.6% fib. So a lot of these 1-2 setups are failing. That's why it makes sense to have the biggest position size as close as possible to the 78.6 retracement. So if you now ask, okay, but the primary expectation is basically the white count, the sell-off, why should I scale in there? Well, there will be people who want to scale into MATIC, and this is certainly an area of support where the price certainly should react to, and in a bullish interpretation, in the bullish scenario, it should turn around there. Yeah, it should get the turnaround and rally in a third wave. Okay, so of course, I don't know the future, therefore we want to be prepared, and that's the advantage of the Elliott Wave method. It tells you to a degree probabilities, but it also tells you when your risk is low. And in this area, if you know 2 scenarios and one of them has a possible low risk entry point, it makes sense to enter it, especially if it's a 1-2 setup, because normally you get really good reward to risk ratios here. For example, even if you enter at 97 cents and you set your stop loss, whatever, around 82, yeah, I mean, how much do you risk? Maybe 15 cents or so. But your possible reward, I mean, if this really kicks off and we have a 1-2 setup and the wave 3 would rally, and you enter at 97 cents and it's also turning around there, then we're talking about 171 as a target for the third wave. I think that's a pretty decent reward to risk ratio. So again, maybe that support area fails. Yeah, actually in the primary expectation it would fail, but it doesn't matter because there are countless examples where an alternative count is working out. So don't trade the count, trade the pivot points, trade the support areas, trade the resistance areas, trade where there is low risk. Again, I'd always try to preach that so people understand it, because a lot of people think that just because a count is a primary expectation, if it doesn't work out, the analysis is wrong. That's of course not the case. All the analysis does is provide scenarios. My opinion will be one of 2 or 3 will be the most likely one, but don't be naive, you know. Nobody has a crystal ball, and this is all about being successful in trading and investing, not about who's right, who's wrong. So from a normal Elliott Wave point of view and how these types of analysis should be understood is if you have 2 or 3 scenarios and one of them shows a good setup, by all means, you know, trade it, because the risk is low. You know, you have a good entry point. If it fails, it fails, not a big deal. You have a stop loss, but the reward is possibly great. Yeah. So, and if the setup fails, then, you know, for example, if this setup fails here and you come down, then at least we have a high likelihood that we really are in the third wave, and then you might have a short trade setup, you know. So that's how it should be understood. So that's sort of how I understand at the moment MATIC. There is a bullish interpretation, of course, but I said it before, it would be a very unusual process if MATIC really bottomed here. I would have to count it as a possible 1-2-1-2 setup, but also that is very, very weird. I'd rather count it as a truncation, so a wave 1 and then A, B, C with a truncation and then rallying higher here. But it's not the most likely bottom process setup. Therefore, other charts, you know, to me have a higher likelihood of working out. But still, you know, this is a potential trade setup. If you choose to do so, you can, of course, trade it. So I'm going to look forward to reaching that area. And then again, if we don't reach that area, then what you haven't lost anything, right? So again, here's also the idea. If you don't have any exposure to MATIC, but you want to invest in MATIC, for example, why not start to scale in, you know, when we reach 102 or so, you know, at least with a small position size, because there's also never a guarantee that we reach these support areas, at least with a small position size. You know, maybe you want to get the foot in the door, because a lot of people always wait for the lowest price. Sometimes you don't get it, you know, have different buy orders set here in that region. It all depends, you know, there are so many different ways how you can trade this. But yeah, I can only give you here the area where I believe the price will turn around, because I don't know your portfolio, I don't know you, I don't know your financial situation and so on. So I can't really give you advice, but I can provide you with some possible trade setup, and then you can act on them if you choose to do so. Okay, that's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.